welcome back to Starting to Scale. This is the last episode in Series 2, and I am kind of like ready for a little bit of a break over the summer. Lockdown has been fun. It's been super full on with 4 kids and work and podcasting and all the other things that I love to do. But yes, it's going to be nice to have a little break. And I just wanted to say thank you to all of you for listening, and thank you to the amazing guests that have come on. It has been so great to get to interview some incredible people who are doing really cool stuff with entrepreneurs, or to also the founders that I've had on the podcast as well. It's been really lovely to connect with all these people. So do come back in September. I'm doing something a little bit different. I'm also launching a boot camp for female founders, so you can nail your business fundamentals and your marketing fundamentals and connect with other like-minded female founders. So get in touch with me if you think that might be something that interests you. And all that's left to say is let's get on with this episode, where I am speaking to Reza Hooda, who is an accountant, an author, a mentor. He is doing amazing things in the accountancy space and makes numbers and finances that lots of people think and find boring, fun and interesting. And, you know, he's really insightful. I really believe that Reza is a great resource if you want help with understanding your numbers and getting better knowledge of what is going on in your business. The financials are so critical to managing your business, and it's really important that you have got a good understanding of how it all works. So definitely reach out to Reza, and I hope that you find this podcast really informative. Hi, Reza. Thank you so much for coming on the podcast. I've got Reza Hooda today with me from Walji. Have I said that correctly? You can correct me. Thank you. Reza, do tell us a little bit about you and about your business.
Sure. I am managing partner of Walji & Co. We are a firm of accountants based just outside Southampton in Hampshire on the sunny south coast. I have been running my own accountancy firm for well over a decade now. I trained with PricewaterhouseCoopers, where I was in the tax department advising entrepreneurs and owner-managed businesses to structure their affairs in the most tax-efficient way and grow and scale their business. And then it got to a point where I was always quite entrepreneurial, so I wanted to get out and run my own business. And the opportunity came up for me to buy into a smaller accountancy practice, a traditional firm that I did back in 2008 in the midst of the recession, and took on a challenge to bring it into the 21st century and beyond. So it's been a great journey for me. I love working with businesses to help them to understand their numbers, to take care of their finance function, and help them kind of look ahead to achieve their goals and dreams, whether that be scaling their business, whether it be building a lifestyle business, whether it be, building a business that meets their kind of family goals, whatever it is. I love working with entrepreneurs and ambitious business owners.
Amazing. So same as me. So that's interesting. You said you started working there in 2008. So that was in the middle of the recession.
Mm-hmm.
Yeah. And you've managed to come out fighting the other side. And so talk to me about what you've done, because I know you're very into sort of, when you said you brought it into the 21st century, and I think there's lots of businesses that could benefit from some of the ways that you work. Can you talk to me a bit about that?
Sure, yeah. So I guess with any business, it has kind of key fundamentals. And no doubt, if you're starting out in business, a book that you should absolutely read if you haven't read it already is the E-Myth Revisited by Michael Gerber, which is all about building a business that can run without you, about having the right systems in place. So, there is a difference between entrepreneurs and small business owners. Small business owners are people who run a small business. Entrepreneurs and small business owners are not the same thing. Entrepreneurs solve problems. So if you are truly entrepreneurial, then when you are setting up your business, it's about kind of, you will be faced with challenges and problems along the way. And it's up to you to kind of set up a business that can operate without you. because the reason why you probably set up business in your first place is that you don't want to kind of work for anyone. You want to not just do the job that you've always done, kind of be that technician. You want to get out of that technician role and actually be the entrepreneur and take your business into higher levels. So, systems are probably fundamentally the first place where you need to start. Get in place the right systems, and that will be right from your financial systems, your operational systems, your HR systems. But crucially, I'm here as an accountant, so I'll talk about the financial systems, which are fundamental really to the success of any business. If you don't know where you are and where you are heading, then it's very difficult for you to kind of grow a business in any meaningful way without a handle on your finances today and where you want them to be.
I know. I'm always amazed. I mean, when we set up our business, we had a non-exec director from day one, and he sort of instilled in us sort of monthly board meetings, and we used to review our management accounts every month, or maybe it was every quarter, but it was it was really regularly, and we were all very on top of our numbers. And quite often I talk to scaling businesses and they're not in that sort of, they don't have that discipline. They probably have their board meetings for some of them once a year, and they're not getting regular management accounts and things like that. And you and I met on a webinar when we were talking about cash flow, and there was lots of things that we really agreed on. And I know one of them was this, which is knowing your numbers, understanding your numbers, being clear on your how to read your management accounts, and all those things are so important. And I'd love for you to share with the listeners why that is so key if you want to run a profitable business and scale it.
Yeah, absolutely. So I guess it can be daunting for someone who is not who doesn't have a financial background. So if you're setting up a business and you are not an accountant or not particularly savvy with numbers, then it can be daunting to understand, what a profit and loss account means or what a balance sheet means, etc. But, nowadays it's, the tech is at a point where the availability and the ability for you to get real-time management information is a lot more straightforward than it was kind of 10, 15 years ago. And working with, the right partner, the right accountant, the right kind of finance team, you are really able to get figures which will give you a pulse on your business as to how it is doing against the metrics that you have set for yourself. In conjunction with, we don't just talk about financial metrics. There are also non-financial metrics in your business which are equally important, which show you how well you are doing. And the ability to, see these on a dashboard gives you the direction to actually make meaningful decisions from information. And that's what running your own business is about, is to know, okay, where are we now? What's the business generating now based on the numbers we are seeing? What areas do we need to work on? So, for example, monitoring key metrics like your gross profit margin. So you probably set out to say, right, we've designed this product, we are going to go to market, and we are going to generate, you've done your forecast, you've got your budget set out that, you're going to make X amount at the end of the year, which relies on you marking up your product by 40 or 50%. What happens in reality is that you'll go to different customers and you'll have individual conversations with different customers, and one customer will barter with you and will negotiate hard with you, and you'll end up selling at a bit less margin. You'll say, oh, that's okay because we've got other customers here that will make up for it. And that happens over a period of time, but your numbers will actually give you the true reality of where you are at that point in time. So you'll see the effect of all the decisions you've made and the deals you've done in your financials, which is crucial, really, because then if something is going awry and you've got salespeople who are offering discounts to your customers left, right, and center, that may not always be refed back to you. So having a pulse on your financials is critical for managing your business, because that then tells you what you need to do. It may be that you need to then create better systems, better clarity for your salespeople, revisit your costings as well. So all those decisions which you need to make as the business owner come from what your financials are telling you, which is the financial performance of your business in real time.
And how often should you be reviewing that as a founder?
As a founder, you probably ought to be doing it depending on, if you're a founder, probably at least once a month. So having monthly management accounts, because you're probably in a position where perhaps you don't have much cash, or you've got investors' cash, which means that you need to take even more care and be even more diligent in terms of how you're spending money, what performance you're doing, what return you're getting to investors. Because if investors ask you, how is my money doing? How is the business doing? You need to be able to tell them exactly where you're at. So, if you're an established business, you can probably get away with quarterly if everything is functioning in an orderly manner. But otherwise, definitely, if you're scaling, you need to have a handle on your numbers, at least on a monthly basis.
And yeah, I mean, I totally agree with that. And what are the key figures that you would be telling founders? It's interesting what you're saying, because obviously lots of founders are, experts, or they're very creative, or they come up with this product idea. And of course, they're not going to be accountants, or maybe they don't even, particularly like numbers. And so first of all, they need to find a trusted person to manage their accounts and help them. But what are the key figures that they should be looking for? What are the key, the important, you've mentioned the profit margin, the gross profit margin. What are the other things that you would say, these are the things you definitely need to make sure you're looking at? And if you could just explain why those are important.
Because every business is different, and you need to look at what are the numbers that matter to you. What are the numbers that make a difference to your business? And it's about selecting those metrics and tracking them on a meticulous monthly basis. So one of my favorite quotes is, anything that is watched and measured improves. Meaning, if we have these numbers that we are looking at on a regular basis, we will be focused on making sure that those numbers are moving in the right direction. So, gross profit margin is a common one, but depending if you're in a subscription business, then you'll want to look at, how many subscriptions are you onboarding each month? What is your monthly recurring revenue? So that's another one that you want to be looking at. What is your churn rate? How many customers are you dropping? And then, so it's not just about looking at non-financials, like, how many leads are we generating? How many emails do we have in our email list? How many leads are we converting into sales? So, the way we work with clients is more on a holistic basis, not just looking at the financials, but looking wider and saying, okay, what data do we need to be able to assess whether we are working to meet our goals and whether we are being successful in what we are doing. So bringing all those numbers together, now we have the ability, using tech, to use things like Zapier, where we can connect one app with another, and we can really get some good data, which tells us how the business is doing on a real-time basis, to mix the non-financial and the financial. So it's actually, it becomes quite exciting. It's like it's a game of business. You've got these numbers and you've got these flashing lights, and everyone wants to make sure that, at the end of the month, that the numbers are looking good. And so the more you get into that mode right from the, day one, the better you will be, because as you are constantly looking at numbers and measuring them, they will inevitably improve because they have your full attention and focus.
And I think that's really interesting. So you're doing that with your clients, your sort of ongoing clients. Are you helping them forecast and then looking at each of those individual things? Because some of the things that you're talking about is really, obviously it's really important. The more leads you're getting and the better your conversion rate, then that all obviously all turns into profit. I don't know if I've met an accountant yet. Maybe there are that goes into that much detail. Or is that something that's kind of quite particular to the way that you do business with your clients?
Yes, I guess, it's not, and this is because I guess for the audience, one of my other hats is that I actually coach and mentor other accountants to build more profitable, successful, and impactful accounting firms. So, I'm on that side as well, where I'm helping other accountants to do better. And one of the things that I say to them is that, in this day and age, in this digital age, we need to step up. We actually need to do what we were trained to do in the first place. For far too long, accountants have got complacent with the recurring fee model, where we just did once a year accounts, looking in the rearview mirror, and as long as we didn't make a real pig zero of it, the client would come back again. But times have changed, and the demands are much greater, and we need to step up, and because we can add real value. We have such a privileged position of having the financial know-how and the expertise to really add value to small businesses, entrepreneurs. not only with our financial acumen, but also through the experience that we build up working with other businesses, because we are seeing so many different industries. Perhaps we're even working in niches. So there's so much insight that we can use to help clients. And metrics is one of the things which I'm really passionate about. In fact, another side project I'm working on is an app as well called Metrics That Matter for accountants. So metrics for me is really important, to have a dashboard of not just financial but non-financial metrics as well, which actually give us meaningful information. So with the accountants, it's about, not looking at the inputs, not looking at timesheets, which is what accountants have done in the past, or recovery rates, which is what big firms use, because that is not a good measure of how well we are doing as a firm. What we need to look at is the outputs. What value are we giving to our clients, and how do we measure that? So how can we measure the results, the outcome, and the solutions that we are bringing to our clients? What is important to our clients? So for accountants, it's, clients value us being proactive. How can we measure that? Clients value us turning things around quickly, accounts quickly, and tax returns quickly, and answering questions quickly. How do we measure that? How can we get that onto a dashboard that gets us and our team looking at the metrics that matter, and not the traditional utilization reports of how many hours each employee has done, just because that's the way it was always done. The model is broken, so we need to fix it.
Really interesting. I love it, because these are the things that I like to do with my clients, and a lot of it is on reporting and analysing what's working and what's not working. I think for that to pull through, if you're taking that data and pulling it through, there must be so much that you can help clients with. So what are the biggest challenges that you're seeing founders facing first of all, let's talk about when it comes to numbers and accounting, and then we'll move on to with their business. But what are those big challenges for them when it comes to the things that you're helping them with?
I guess cash flow is always a big one when it comes to startup businesses, founders, because majority of business fail within the first 5 years. And that's because they run out of cash. And that's, again, why financials are so important, to monitor your financials, to know how you're doing, to know how much cash you have available, looking ahead with cash flow forecasting. So cash is critical, and having systems in place to be able to manage your cash flow. And if you're not able to do it, then working with a finance partner, someone who can really add value in that regard and warn you in good time, so that corrective action can be taken, rather than you having to suddenly realize that you don't have enough cash to make the monthly payroll, in which case it's too late. So having that visibility well in advance by having a good finance partner or the right financials and systems in place is critical, really, to the success of a startup business.
And presumably that also helps, or with that it would inform things like which suppliers to work with, because it's interesting, isn't it, that with a direct consumer business you're getting the income or the cash coming in generally straight away at the point of purchase. If you're selling your products in retail or through wholesalers, then sometimes that could be 30 or 60 days, and then the impact of that is such a big thing on cash flow that you wouldn't always necessarily think up front. I quite often say to my clients, we need to work on your payment terms, because actually we don't want you getting paid on 30 days or 45 days. We want that money to be much, and is that another thing that you're kind of advising people on?
Yeah, definitely. It's so payment terms is a big one, but again, some of the things which are forgotten, like the payroll, the VAT, which props up every 3 months but can be forgotten when you've got lots of cash in the bank and you think, oh yes, we can spend this, but actually a lot of that is VAT money which is not yours, which needs to pay across. And similarly with corporation tax and payroll taxes. So these are things which are often forgotten, which if not put into a financial model which is kept updated, for sometimes it's the most successful business owners that I have come across are ones who have meticulously managed their cash flow. I remember a client I had who updated his cash flow probably about 5 or 6 times per day.
Wow.
Something new happened. He was in the construction industry. So, payment terms. But he was a QS by trade, so he had that kind of savviness in terms of measuring costs and cash flow and that sort of thing. And he had his Excel spreadsheet, and we would have a meeting, and literally he'd be opening up his Excel and want to show it to me, and changing it day by day and he was very successful, and I think it was down to the way he managed cash in the business that he was able to be successful in what he did.
And if what other challenges are you seeing founders facing? I mean, just actually, I'm interested to ask you from a sort of more general basis, because obviously you're working with lots of different businesses in lots of different sectors, and it's not just the cash flow that they're struggling with. What are the other struggles that you see? Is it around the teams, or is it around getting funding, or?
Yeah, so probably talk about two main areas. One is teams, one is pricing.
Oh, I love pricing. Your book on pricing, I've been reading it. I love it.
Yeah, so pricing is another one of my kind of passionate subjects. So yeah, pricing is a big one. Not actually understanding or knowing how to price can have a big impact on the profitability of your business. See, most business owners price based on gut feel or based on what the competition are doing. The problem is competition don't know what they're doing either, so you end up just benchmarking against the wrong price. Whereas actually you should be looking at pricing based on the psychology of how we as buyers react to pricing decisions, which is a fascinating subject in itself. And really the focus should be on, there are two types of firms, two types of businesses. There are kind of there's kind of the low cost model, where you try and focus on being the lowest in the marketplace, and then there's high value differentiation model. So where we try to be the cheapest in the marketplace, it's very difficult to pull that off because there's not room for enough players in the marketplace to compete on price. And you have to kind of set out right from the very beginning that you want to be the cheapest to be successful by being in that model. And firms, businesses like Ryanair or Lidl or IKEA or Dell Computers, they set out right from the beginning to say, yes, we are going to be the cheapest. And they set up their back office systems, their operations, to be as efficient as possible, to be really slick and automated so that they can actually deliver a profit while still being the cheapest in the marketplace. But you can't have too many players in that industry. It just doesn't work. The financials don't stack up. And if you try and compete, you're going to be put out of business before long. And that's why for most businesses, we need to focus on high value differentiation. So focus on adding value and focus on being different. And when you do that, then your price is up to you to justify based on the value that you bring. Now, an objection I hear often is that, how do we differentiate our product? We can't differentiate it just like, somebody else's. You can differentiate anything. And a few examples are, just very basic examples like going into the supermarket and buying lettuce. You go to the supermarket and you see lettuce kind of wrapped up in plastic and it costs 50p in the vegetable section. Then you walk along a little bit and you see that same lettuce. It's been cut up and it's been put in a bag in the fridge and it's now selling for £1. It's the same lettuce, probably even half the lettuce that's in the bag. But people pay double the amount for the same lettuce. Why? Because they value the convenience and they value the time that they will spend having to cut up that lettuce and put it into their sandwich. So what's gone on there? They've differentiated the lettuce by putting it in a bag, and people are willing to pay more because they value that convenience. And so many other, like bottled water, for example. You can get water out of a tap for free, but people will still pay a lot more money to go and buy a bottle of water from the supermarket, and even more money if it's got a brand on it, like Perrier or something. So think of how you can differentiate your product and communicate the value of your differentiation to your customers, to then be able to price in a way that still gives the customer value for money. Because at the end of the day, when people are making a pricing decision, as long as the value they're getting, and that includes the actual value plus the perceived value, is more than the price that you're charging, then people will buy it.
I talk a lot about how to differentiate in a crowded market with my clients, because I think that's so key, because there are so many businesses selling whatever you're trying to sell, or consultants selling and actually if you can't, you need to differentiate yourself, don't you? Because if you can't differentiate yourself, then you can't set yourself apart. And then obviously, like you said, it is just people are just buying based on price, and you don't want to get to that point. It's really interesting because I think after the summer we could maybe do a little Q&A together on pricing, because I did a session the other day. I was doing a webinar the other day, and there was so many questions around pricing. I think it's a big issue for a lot of businesses that, and like you said, how do founders necessarily know how to price themselves? They might look at competitors, and I've seen businesses that I work with do that, and the competitors are also totally messed it up and are undercharging. And when you actually look at what it costs you to acquire a customer versus what you're actually charging them, those figures don't always add up. So yeah, pricing, and your book's really good. I've really enjoyed it. Thank you. And so the other thing you were saying was teams or the culture. And I know you really believe in the culture of the business and a team. I mean, gosh, if you want to get investment, it's all about the team and the founders, isn't it? So important.
Yeah, absolutely. Yeah. And that would be probably another big challenge up there for you as a business owner, to build the right team, because finding the right people is so hard. Attracting the best talent and then retaining your high performers. But building the right culture will help you to do just that, to attract the best talent, to retain your high performers, and to maximize everyone's potential. And it's about, it's setting up a culture which values everyone, where there's trust and respect, where people feel safe, where they have this sense of belonging. Because contrary to what most people think, money does not motivate people. What motivates people is actually the ability to be autonomous in what they're doing, to be able to do something which they're getting mastery on, where they're upskilling and getting better at something in themselves, and to be working for an organization that gives them purpose, where they can attach themselves to something much bigger than them, and get those three ingredients right together with the right culture around you, and you can build a really high performing team. One of the things that I talk to a lot of accountants on is to move towards a results-only work environment, which we did a few years ago. And what that means is that basically your people can work when, where, and how they want, as long as the work gets done. Because the 9 to 5 came from the industrial age, when we used to have to work in factories in order for work to get done. You had to physically be at the factory between the hours of 9 to 5 to get those widgets through the door. Fast forward 100 years, we're in the digital age, but we're still stuck in the working practices of the industrial age. It's absolute madness. We're in service industries now where work doesn't happen in a factory. Creativity doesn't just happen between 9 and 5. It can happen any time of the day. We can, go to a coffee shop. Well, not now at the moment, but normal times we can go to coffee shops and open up a laptop and still be working. And this, I guess the pandemic has been the silver lining in this, because it's accelerated people's thinking that yes, work is still getting done without our employees being in the office between the hours of 9 to 5 with their bums on seats. So having that kind of open culture to your people to say, yes, we understand that, we don't need to be in a fixed place of work. You can work when, where, and how you want. All that matters to us is how work gets done. And then how do you measure that? Because people say, well, if we don't know that they're working, how do we know what work is getting done? It goes back to the metrics. Have clear metrics as what do you want to achieve? What is work? And then everybody knows what they need to output, and that's what the focus is on. So it doesn't matter where they're doing it, when they're doing it, as long as they're getting it done, that's what should matter.
And I think that's so important. And I would say, looking after your staff is the most important thing, because without them, you have nothing. And actually, like you said, people want autonomy, don't they? They want to be able to get on with it themselves. And as long as they're doing a good job, then that's great. And actually, I think you're right. I think what's happening at the moment is allowing people to see that it doesn't matter where you are, you can still do your job. Reza, you are a wealth of knowledge, not just on accountancy, but pricing and employing people and everything. And thank you so much for coming on the podcast. I like to keep these relatively short and sweet, but I really would love for us to maybe do the Q&A session after the summer, where we can get people and we could talk about pricing and things like that, because I know that's a hot topic.
That sounds really good, Emmy. Would love to. And thank you so much for having me. It's been a pleasure.
Thank you so much for listening to another episode of Starting to Scale with Emmy Faust. That's me. It has been great to have you listening again this week. If you know other founders that are looking to grow profitable, sustainable businesses, then please do let them know about this. And it would make my day if you leave me a review on iTunes and let me know what you are enjoying from this podcast. If you want to get in touch, you can do that through my website, emmyfaust.com. And don't forget, I've got lots of great resources on my website. Go to emmyfaust.com/free. Have a fantastic week, and I look forward to catching up with you again next week.